This is Mark Maneri, joined by my co-host Larry Walters, and you are present at the National Fairtax webinar, and we execute this the fourth Thursday of every month, and Larry and I were just speaking and marveled at this evening's webinar. Marks the first webinar of our 9th year performing these and educating the public on this really brilliant piece of legislation. So it's a special night for us, and I'm honored to do it with my colleague Larry Walters, and of course we've got some incredible supporters with us that are regulars, including Ron and Elaine Malero and Dave Leake and others, and we appreciate you and your support and and not giving up on something that could make such an incredible difference. And we just need to catch a little wind in our backs and move this thing through the grassroots, which we intend to talk about tonight. So yeah, we thank you for taking time out of your evenings to be here or this evening to be here. And what we'll do tonight is offer about a 25-minute overview of the main merits of the Fairtax, and then we will take a break for questions, and then we will review, which usually runs about 5 to 10 minutes, our special topic where we dig in a little bit deeper on a certain point or element of the Fairtax. And tonight we're going to talk about the impact on seniors, and well, we've got some seniors on the line, including my partner Larry, who is just so well versed in this legislation, and man, I just really honor him for his commitment to seeing this through something that will make such a difference for our country. So I just want to also point out to you on your control panel, there's two ways to get our attention. One is a hand. You can put your hand up. We'll see it, unmute you, call on you. You could have the floor. And then there's also a place where you can type in a question, and we encourage that. So we want your questions, and while we know a lot, we maybe don't know it all, and we will attempt to answer your questions to the best of our ability. And if you stump us, then you know that could happen. It has happened every once in a while, not often, and we'll commit to getting back to you after the webinar. So as we move into this, it's just really important to share the timing of where we're at here. So President Trump has made quite a bit of noise about tax reform, and he has not come out in favor of the Fairtax. He's got some platform that he's getting behind, and while it may be an improvement around what we have, an improvement may be a bigger risk than doing nothing at all, because what happens is we get lazy and we get complacent and we say, oh well, it's really difficult, and that's a little better, so we'll deal with that for another 50 years. So if we don't go straight to this really brilliant piece of legislation, we run the risk of losing any audience at all. And so we've got a bit of momentum on our side, and we want to capitalize it. And you being on the webinar this evening is a big step in that area, because if what you hear tonight aligns for you, it makes sense to you, you can see the merit in it, and you can see the value and how it makes a difference for all parties and all entities in this country, then we will request you being in action beyond just listening. So with that being said, thank you for those who've been on before, and there's several of you who have, and welcome those who are new. And one of the things we like to say about the Fairtax is that it's simple, it's fair, and it's transparent. And when you look at this slide here on the screen, you can appreciate the need for simplicity. We have a tax code, and this is several years old, as you can see, that has far eclipsed 75,000 pages. Yeah, it's just convoluted, and I'm going to go through actually 7 points that would be fundamental to a progressive tax legislation, and the Fairtax has them all, and what we currently have has none of them. And one of them is simplicity. And so here's what's so challenging about what you're seeing on the screen. So not only is it obvious that it's convoluted, but unfortunately it actually serves a purpose. And it serves a purpose that for our legislators, they can maneuver within it. In other words, they can manipulate it, change it, pull a lever here, rewrite something over there, take one line out, put another one in, and we as the public never know about it, and they get to do that for purposes of largely generating revenues or allocating revenues towards their district, congressional district projects. You know, they find ways to get creative with funding by manipulating the tax code without ever having to ask permission of the citizens who are the ones who give the money. So there's a real risk here because, quite honestly, Congress has gotten really used to being able to maneuver in a shroud. And that's part of what makes this fight a little, not a little bit, a lot challenging. But we can overcome that by voting in office the people that support the fair tax. So the fair tax has simplicity on our side. Our current tax code, it is convoluted, it punishes growth, and I love this, it inspires the wrong behavior. Yeah, there's, obviously I just spoke to a lack of transparency, incredibly inefficient, impedes privacy. There's winners and losers. If you know someone and have the means, you can circumvent. And if you don't know someone and you don't have the means, well, you may earn less money, but your effective tax rate is higher than some that make a lot more money than you. Yeah, that doesn't work. Yeah, and so your presenter, that's me, self-employed business owner, and I can relate to this being, our tax code being time-intensive, laborious, and I can attest to the fact that I spend many hours around my tax situation and contemplating decisions that impact my tax situation. And oh my gosh, how great it would be if I could reinvest that time and creativity back into my business. Yeah, it would make a difference. So the fair tax systematically eliminates those 7 what I call drag, elements of drag that are put on our economy, and we're going to show you how it does that. So first of all, it's simple. The fair tax is 131 pages double-spaced, and man, you could download this thing and read it and actually understand it. So, you know, simple is in this case better. And, you know, one of the things that people say about this, well, you know, we live in a complex country, and yeah, I get that. And sometimes simple is better, man. And I think that the way this legislation was structured is just really brilliant. And I'm often in a conversation where somebody says, yeah, I don't support Obamacare. Like, okay, well, you know, it's been around for a bit, and I understand a little bit more of it, and I have my own views on it. But the truth is, when I ask people questions, and I dig in and I peel back the layer of onion a bit, and I go, yeah, what is it that you don't agree with? I get really vague answers. And what I really come to the conclusion of is people don't really understand what's even going on in the legislation. Like, nobody really knows. And it's very convoluted. It's several thousand pages. So while I understand that certainly healthcare isn't a simple issue in our country, and our tax system isn't necessarily, or our economy as a whole isn't necessarily quote unquote simple, to offer a simple solution to raising revenue for our government while propping up the economy, man, that just is really smart. And there's 24 of the most brilliant PhD economists were tapped and brought together, and $22 million of research was put into, including hiring these economists, to creating this. And so when we talk about not only simple, we're also talking about really, really smart and intelligent. Like, this thing wasn't whipped together by some people who just thought they'd have, some good idea and see if it sticks. No. $22 million of research went into this. It's the most money ever spent in history of the United States on income tax reform. So we've got something here, starting with it being, really, really simple. And it supports growth. So the Fairtax is a consumption tax. You pay, it's not an income tax, and that's a big difference. It's really important to know that. It is not a flat tax. A flat tax still taxes income and gives Congress power to raise it, like what happened in our history. It's why we are where we are. We started out with a flat tax, couple percentage points. And then Congress got their hands on it, and you see where we're at now. So the Fairtax is essentially a national retail sales tax, and it eliminates all federal taxes that generate revenues, and it repeals the 16th Amendment. So there's a whole list of these taxes, but we're talking personal and corporate income taxes, Medicare, Social Security, so your FICA taxes, the alternative minimum tax, death tax, estate tax, capital gains tax, and there's a handful of others that I may be missing. And it takes it all away and it goes, let's tax spending, and that works because it's progressive, and it inspires the right behavior. So what do we want businesses to do and individuals to do? We want them to grow and expand. Well, right now we have a tax system where the more you expand and earn, the more the government takes. So you get that, right? Like that doesn't incentivize and inspire growth. And the Fairtax absolutely does that. So if we look at some of the benefits here, and there's a lot more than this, but these are some of the big ones. So it's estimated that there's $13 trillion in global personal and corporate assets in offshore banking centers. And this is global. This isn't just American. This is global cash money assets. And it's estimated that if the Fairtax were passed and capital gains and personal and corporate income taxes went away, that $1 trillion would organically flow back into the U.S. economy within 1 year. Not some government incentive program that artificially prints $1 trillion and puts it back and runs risk of inflation, long-term inflation. So this is a brilliant idea, and what's possible here with cash flow back into our country is really, really astounding. So the U.S. becomes a corporate headquarter haven. So if you're paying attention, and I know most of you are, you've likely heard the term inversion. And inversion is something that's been happening over the last 5 to 7 years especially, and that's where international businesses that are founded and considered corporations of the United States, they relocate their international headquarters to tax haven countries. Ireland's a big one. And they save many millions of dollars for doing it because these countries have lower effective corporate income tax rates. And of course, Trump is making all kinds of hot air around penalizing companies for doing this, and he may just do that, but imagine if the corporate income tax rate in America was 0. Yeah, guys, the entire world would look at how they could bring their business here. Those that had the means to do it. So yeah, that would happen in a big way, and if and when it does, well, man, you are going to have a huge boon here, right? There's going to be all kinds of construction. The corporate real estate market is going to go through the roof. So there's going to be jobs galore. for people hiring staff and for all the building that's going to occur with these new headquarters. And you're going to have yourself, quite an injection of economic growth in the economy because of it. And then the underground economy. So right now it's estimated $2 trillion. What does that mean? Well, largely people who are avoiding paying taxes. You've got illegals that don't pay of course, their income taxes. And you've got people skirting the tax system, criminals doing it, and when the Fairtax gets passed, there's just no way to do it. You pay taxes when you check out of the supermarket. Yeah, there's really no way to do that, and if somebody figured it out, it would require collusion between the consumer and a business. And I think the number is somewhere around 85% of all commerce occurs from the largest Fortune 500 companies, and these companies are worth billions of dollars, and they're probably not going to risk their entire business to save a consumer a few bucks in taxes. So, man, it's just a really smart system as it relates to creating opportunities for new ways the federal government can generate revenue and broaden the base of where we collect revenue from. So really, really smart. All right, so fully transparent, no loopholes. So check this out. There's only one tax. It's a consumption tax on new and retail goods and services. So used goods are not taxed. New goods. So there's a couple of great examples that I'd like to use here. So we make a distinction between new and used, and we make a distinction between goods and services. So services are taxed because every time they're executed, they're happening for the first time. So when something is resold, it's considered used, and it's not retaxed. Yeah, and sorry, let me rephrase what I said. We make a distinction between new and used. I just shared that. And instead of goods and services, what I meant to say is retail versus business to business. Business to business transactions are not taxed under the Fairtax, right? So here's a good example. A home builder seeks to build a whole bunch of new houses and sell them. So when they buy their land and they buy all their inputs that going into building a house, the Fairtax is not levied on them. And then they build their house and they sell it as a brand new good to the consumer. In that case, the Fairtax is embedded inside the price. So let's say it's $100 grand for the house, just to make numbers really easy. The Fairtax is included in that. So it's inclusive, not exclusive, which means the consumer, when they buy that house, they pay $100 grand, not $123,000. And when that construction company receives the $100,000 for the new build, they have to set aside 23% of it, which they then submit to their state sales tax bureau. Yeah, so 23% national retail sales tax will be on all receipts. Oh, now, in the previous example, when the homeowner resells the house, the new owner, it's considered a used good, they don't pay fair tax on it. Okay, so you're getting an idea of how it looks. Another example is, I like to use the example if you go to the mall and you buy a pair of designer jeans, and you go into the Gap and you got your jeans and the price tag's $100, which seems a little crazy, but by the way, that's actually cheap for a pair of designer jeans. And you go to the checkout and you pay $100. And when you get your receipt, it'll say $77 went to the store for your item and $23 were collected for national sales tax. Yeah, so that's how it works. So this is such an efficient system. So first of all, the states will collect from businesses. 45 states currently collect sales tax, and we will leverage that same infrastructure to capture the Fairtax. And in the second bullet, you're seeing 18 million businesses versus 120 million households. And those numbers are a little bit old, but basically we get 80% more efficient by collecting from 80% less entities. That's really smart, you know, because right now it costs the IRS a quarter for every dollar that they collect. I mean, that's not really great. There's only one form to fill out. Here's your gross receipts. Yeah, your gross revenue. Multiply that times 23%. That's how much money you send in. So, you know, it's a pretty efficient and simple platform to collect. The state sales tax bureaus that will be created once this happens are they are funded by being through 0.25% of collection of their sales tax in their state, and that's the staff that they need and the oversight they need to ensure that they're collecting all that they should, and then they submit that to the Department of the Treasury. All right, so, you know, we talk about the IRS, $13 billion to run, only collects about 80% of what it should. That's $450 billion, by the way. And the Fairtax would eliminate the IRS over a 3-year period. So, man, that's just really, really smart. So we protect our privacy. You pay your taxes when you make purchases. There's no detailed forms to fill out. And April 15th just becomes another spring day, as we like to say. And the Fairtax is fair. Like, you just, you know, if you don't spend a lot of money, you don't pay a lot of taxes. If you spend a lot and consume a lot, you're going to pay more. That's the definition of progressive. So, yeah, that makes sense. And the other thing that makes sense is this part of the legislation written in called the Prebate. And the Prebate assures that no one pays federal taxes up to the poverty level. And what that means is the originators of the Fairtax, the authors of it, really looked at it and said, how do we ensure that lower income class Americans that are really that are really challenged in generating income, how do we make sure that they're not overtaxed, so to speak, and not really hurt by this? And they came up with a solution called the Prebate. And what the Prebate does is direct deposit at the beginning of each month the Fairtax, the amount of tax that they would have paid over the month on their spending, which is basically their basic necessities. So we're going to show you a chart, see what that looks like. All right, so if you move your eyeballs down to the right side of the screen where my mouse is, and you see the green area here, in a 2-adult household with 2 kids, so you've got 4 people in the house, the Department of Health and Human Services has developed poverty spending guidelines, and they suggest that a family of 4 operates at the poverty level threshold when they spend $32,480 or less. You know, so what they're saying is the first $32,000 in change, yeah, that's like poverty level spending. That's like basic necessities, food, clothing, shelter, transportation, medical supplies. And if you multiply that annual consumption allowance times 23%, the fair tax that people will have spent on those goods and services, you get $7,470. You divide that number by 12 for 12 months of the year, and every month on the first of the month, $623 get direct deposited into every qualifying household's bank account, regardless of income. You could be a multimillionaire, or you could, be just struggling to get by. So talk about fairness. You're reimbursed in advance for the fair tax you pay on basic necessities up to the poverty level limit of spending. Yeah, it's really smart. And it's fair because everybody gets it. It's not, there's no income bias there. So if you think about it, man, what an incredible gift and opportunity this is for everyone, especially those that are really challenged in their income. So think about it. You've got a new stream of income coming into your house every month with the prebate, comes in automatically. You've got the ability to purchase used goods and save a bit of money there. And you generate net pay, which, so in other words, instead of gross pay where the government withholds your taxes and gives you a fraction of it back in your refund, and people think, oh, look I got money back, I made out. No. You got taxes pulled out of your paycheck all year long to the tune of, many multiples times what your refund was. So if you're making $5,000 a month and your net pay right now, your take-home pay is, let's call it $3,800, under the Fairtax, if your gross pay is $5,000, you take home $5,000. So the disposable income increase for all Americans is going to be extraordinary, and the average increase in income is going to be somewhere in the 25 to 29% range. It's pretty remarkable just through the fair tax. So when we say the fair tax inspires the right behavior of spending, saving, and investing in growth, now you get to start to see why. Because you've got new streams of income coming in, you've got more access to disposable income, you keep more of your money because of it, and yeah, it inspires all those things that we talked about. Yeah, really, really brilliant. All right, so let's talk about prices, because we've said some things about if you're the consumer, you pay the fair tax on new goods and all services, but you could save a little bit of money on used goods. Well, what does that mean? Okay, so right now, really what's happening is you're not only paying an income tax and all the other taxes, you're actually paying a sales tax. It's just embedded. The businesses, they factor in their costs to comply to the federal tax code and their corporate income taxes, and they put those in as costs when they figure out what they're going to put as the price on all of their goods and services. In other words, we just pay it at the cash register. So in effect, we pay a sales tax, but we would call that an embedded sales tax, or just shorter, an embedded tax. And across all industries, that's approximately 22% of all the cost that goes into a business's pricing model. So what we're saying is, if they are pricing something for $100, roughly $22 of it is their cost to comply to the federal tax code and pay their corporate income taxes. And so they price accordingly. So we're already paying, and that's what we call the embedded tax. And so what happens is, when the fair tax gets passed, the embedded tax of 22% comes out, the fair tax of 23% goes in. And so now a business, they don't have corporate income taxes anymore. They don't have capital gains taxes anymore if they're do any investing. They don't have any cost to comply to the income tax code anymore. So that goes out and the fair tax goes in, and it's not a wash. It's a little tricky. There's a lot of math involved, but what you're not going to see is prices go up by 23%. No, that won't happen. They'll go up by probably 10 to 15% likely in the first year. And then as they capture more market share and do more business because they can lower prices to capture more market share, you're going to see prices come down. Yeah, so that's what's expected. Is it exact? No, we don't know what will happen, but everything leads to that place. And while prices may go up 10 to 15%, if your income's going up on average by 29%, if not more, you're going to be in a much better financial position, hands down. So, yeah. All right. So, who opposes the fair tax? Well, you're looking at it. You are looking at it. I already spoke to why Congress and politicians like our current tax code. And lobbyists, get this, 50% of all lobbyists are tax lobbyists. And they get paid a big salary when they lobby Congress to alter the tax code that lands in favor of the wealthy corporations that the lobbyists represent. You know, it's actually just smart business because the businesses save millions of dollars when it happens, and it justifies to the tune of 600% the cost of the lobbyist. In other words, for every dollar that a corporation pays a lobbyist, on average, it returns $6 in the form of corporate income tax savings. So if the fair tax gets passed, lobbyists are out of a job. Well, at least the tax lobbyists are. And they have a lot of influence, and so, you know, they're not too thrilled with it, and they influence politicians saying don't be in favor of this. So, you know, you're working against some forces here, but it's some real, special interest, selfishness that's going on here. And we got to overcome that through voting in office elected officials who support this legislation. So, yeah, we talked about the impact on prices. We talked about who's opposed to it. We talked about the impact on the economy. Simple, fair, transparent. Man, it just makes so much dang sense. So hopefully you've seen some of that. And now we're going to pause, and we are going to stop listening to my voice, and we are going to open it up for questions here. All right, so I want to welcome Josh back on. It's good to have you, and thank you for your support. You too, Paul. Okay, so I'm going to ask my partner in crime, Larry Walters, to unmute himself. Done. And to join the ranks of being heard and get some help on answering these questions, Larry. So the first question is, did you see Donald Trump's tax reform plan, and do you know what it is? So Larry, do you have an idea of that? Did we lose you, Larry? We can't hear you.
I'm sorry, I can hear. I have another button on my mic cord here, and I hit it by mistake.
No problem.
Yeah, I do have some insight onto the tax plan. You know, I've listened to the proposal and gone over it in my head. And the big thing is that for whatever reason, President Trump, has decided to go along with maintaining an income tax system. Now, he did mention that during his campaign, and he is sticking to that, but I can't help but believing that he is being misled by some of his closest advisors, those who, for their own reasons, would like to preserve the benefits they see with an income tax system. But just to take one point, his tax system is offering for a couple a standard deduction now of $24,000. Now, if you look at the chart that Mark showed a little bit earlier, the Fairtax uses $24,120 as the amount of spending that is untaxed under the Fairtax. So that's pretty close, isn't it? They have, we believe, taken some of the elements out of the Fairtax and implemented them to an extent. But let's face it, if you just look at the details, they want a 15% corporate tax. We can do it with 0. They want an income tax, 3 brackets. We can do it with no income tax. So those are 2 elements that we can do a lot better, a lot stronger, and get rid of the cronyism within an income tax system that their income tax is not doing. Personally, I think the president has gone about getting the changes to not only the income tax system but to the healthcare system in the wrong manner. And this is not the place for me to outline that. But if he had taken a little slightly different path, he could have implemented a tax system, the Fairtax first, which would have fired up our economic engine. With that happening, we would have a lot more people off of Medicaid and onto health care that is at least subsidized to some degree by their employers. That in itself would have made changing the health care system a little bit easier. There's other areas of Trump's tax plan that we can go on bullet by bullet, and we do have a chart that was done by Kerry Bowers that I would be happy to make available to anybody, that goes through a list of like 52 items, 52 elements of both tax plans, and shows you how one matches the other. If you would like that, just be sure to email me tonight and I will be happy to send that to you. Mark?
Yeah, always thorough, Larry. Thank you. All right, so a question we get often, this is from Paul. Thank you, Paul. Please speak to best practices for lobbying Washington, D.C. for this legislation. I've been a supporter for over a decade. Thank you, Paul. Yeah, so, Larry, I'd love for you to speak to this. We've said it over and over that the greatest opportunity to pass the fair tax is through grassroots. It's through citizens like you and I and everyone on this line, on this webinar, who see value in it, and they get involved, they open their mouth, they tell their friends, and they open they use their influence through their vote. And they only vote for people who support the fair tax. They make it a real important point. And there's a magic number, by the way, of 3,000. When 3,000 supporters in any given congressional district write in and say, this is what we want, that's the number that has the politician pick their head up and go, whoa, I better pay attention to this. And that's it with some real effort. Like, that's not doable. It's extremely doable. So I wonder what else you'd say about it, Larry, from another perspective or another angle that could occur beyond grassroots and open it up for any ideas beyond that.
Yeah, I can't really say, unless you have access to a source of some large amounts of money, the only way I can think of is through the grassroots effort, guys. If we could get the funds, we could run TV ads educating the population across the nation on the benefits of the fair tax over any income tax system, be it flat or tiered. We don't have that kind of money. We've not been able to collect it as hard as Fairtax has worked to get funds from the supporter group and from the public in general. It just has not happened. It's kind of sad. I know Mark and myself are 1040 Club members, and we don't even, I think, miss the $10.40 that comes out every month until we see our charge card statement or debit card statement, whatever we're using. That's the best thing I know we can do financially. Like I said, unless you know somebody with big books that's a supporter of the fair tax, an advocate. So what can we do? We have to keep doing what we're doing, but we certainly have to educate more people. And we have to be educated well enough on our own to be able to withstand the questions that might be thrown at us. Most of them will be simple, and you know the answers to. You just don't realize it yet. But those that you don't know the answers to, hey, I have been in sales, worked in sales for over 25 years, and I'll tell you what, and I know Mark is in the same category. When you get a question you don't know, don't try to BS an answer. Hey, that's a great question. I'm glad you asked it. I'm sorry, I do not have an answer for you, but I will look that up and get back to you. That's the best you can do. Just be very front and honest about it. The other thing that we can do individually is through tweets and Instagrams and Facebook notes and emails, faxes, communicate. Take bullets about the benefits of the Fairtax. There's that list that was put together by Kerry Bowers some months back, and I've reorganized it a little bit and color-coded it so that it's easier to sort the various comments. But the first one on here is a great one, and it's for people like yourself, people who are supporters already, or people who are aggravated with an income tax system because they know that the tax system and the government is controlling them. And the question is, or the statement is, do you want America to continue being controlled by Congress, or do you want freedom for us? Only the fair tax can restore that freedom. A simple question, but there's a list of them, 50 or so long, 45, I'm not sure how many there are, and I'll be happy to email that to you. But it's going to be up to us, those that are here tonight, to just work a little bit harder, put in a few more minutes every day, communicate, and educate other people the best you can in your sphere of influence. Mark?
Yeah, thank you. All right. Yeah, you know what, Larry? There's a number of people writing in here. They're asking for your email address. We'll get you the email. We'll put it up on the screen. Well, actually, let's just say it. Can you just tell everyone slowly what your email address is?
I can, but I can also text it out, broadcast it to everybody on the web with us tonight.
Okay, great. We'll just send it to everybody, and if you want the resources that Larry is describing, then go ahead and write into him. All right. So, yeah, Josh has a great thought here. He wrote in, the second plank of the Communist Manifesto is to establish a progressive graduated income tax. And the fair tax would repeal that. And that's what's happening to us. So last question we'll take, Larry, before we move on to the special topic. What justifications do opposition parties use for their opposition? So the fair tax, I'll start, Larry. You could chime in. I'm sure you'll have something to say about it. It's an easy target. It's a real easy target because when you look at completely replacing our current revenue model, the government's revenue model, we're talking about a multi-trillion-dollar revenue model that's been embedded for many years. The fair tax becomes an easy target because it's different. You know, it's seen as almost a bit radical. And so one scare tactic that's used is that, you know, it's going to not fund the government in the way that we need it to fund. And that's hogwash. You know, you just got to do the math, and you look at our gross domestic product and the spending that occurs, and you multiply that times 23%, and the numbers add up. In fact, and when you grow the economy, it's actually, you know, the only tax plan that will ignite the economy and as a result dramatically increase federal government revenue and put more money in their coffers. In fact, we say it's the actual thing that's going to save Social Security and Medicare. I mean, those programs are dying. They're running out of money. But the fair tax with a booming economy can actually fund them. So that's one thing. Another thing is certainly that people will simply just say, yeah, my opponent wants to raise taxes by 23%. Yeah, and they don't say anything else about what taxes the fair tax eliminates. You know, obviously complete hogwash. So, yeah, those are some things that are really relevant that we have to overcome. What else might you add, Larry?
Well, I've kind of broken it down into 4 categories of why people are opposed. One we're all very familiar with, the lobbyists. It's their lifeline. It's their lifestyle. So lobbyists are paid large dollars to influence representatives of Congress to support tax loopholes for their clients. Okay, so that's one reason and one group of people that are opposed to it. The second reason is on the other half of that particular scenario, the congressional representatives themselves. they are getting benefits from the lobbyists. Like what? Well, if they'll support a particular tax reform, a loophole, some benefit for a client, if the congressperson will support that idea, they can expect some contributions to their reelection campaigns, and it puts them in a position as an incumbent of being very, very well financed for their reelections, and that's why it is so difficult for a newcomer to unseat them. That's the second. The third is they're just people out there who are taking advantage of the income tax system, not even honestly. They're actually corrupt. And what I mean is that they are either underreporting income and or overstating expenses that they are deducting. So they're cheating the income tax system in that regard. That's the third way. And the fourth way is that large group of people who are just afraid of any kind of change in their life. You got to think about this now, folks. Every one of us that are on this webinar, every person that's in the House of Representatives and the Senate of the United States, every person that's in the White House, every person virtually in the country has known nothing but an income tax system from the federal government. When you consider 104 years of income tax, there are some people, a few older than that, they're probably not concerned about tax system in any regard whatsoever. But the rest of us, we've known nothing but, and we have some concerns. But those people, they've got a mindset that they're comfortable with what they've got. They may not always like it. They may grumble once a year when they have to do a tax return, but they're not willing to step up to the plate, understand what's going on, and welcome the change for a new prosperous America and a new prosperity potential for themselves. So they just oppose it. I asked Eric Erickson, a radio talk show host out of Atlanta the other day, would you please be explicit? Tell me why it is you are opposed to the Fairtax. His answer is, I just don't like it. That's it. I just don't like it. Why? I haven't gotten a response from that one. Why? What is it that you don't like? He also added, he says, get rid of the 16th Amendment, and then we'll talk about it. And he says you have as much chance of doing that as elephants have as flying. In my opinion, that is an attitude problem. That is not a logical, rational, economic consideration. So, you know, some people just have attitude problems about it, and that's they're afraid of change, and they don't want to take the time to understand what the fair tax can really do and how it is so much greater than an income tax system. That's why you guys out there, Mark and myself, we are so very, very important to this country right now, and we have got to do everything we can to make people aware of it. Letters to the editor is another great thing you can do. You don't always get them published, but it's worth the effort. If one newspaper doesn't write it, send it to a magazine or some other smaller newspaper. Mark?
Yeah. Awesome, man. That was awesome. Thanks, Larry. Let's take one more. Howard's been waiting really patiently for this. So Larry, I'm going to put this in your lap. Please explain the concept of embedded tax. Apparently I wasn't clear about it. Unless it's profit margin, doesn't make sense to Howard. So could you say that maybe in a bit of a different way that's clear?
Well, I'll certainly try. I know it's been something, an area of less clarity to many, many people that we try and explain it to. Okay, Howard, let's try it this way. Make believe you're a business, and you sell shoes, for example, okay? And for those shoes, you buy them from another place, but let's just talk about it from you forward. You buy shoes as a wholesaler. You sell them as a distributor, you sell them to somebody else who is a business also. Right now, the first thing you would do, being in your own business, is you would calculate all of your business expenses. Those are things like your rents, your mortgages, or if you have them, whatever those cases might be, utilities, insurances, and all of that kind of stuff. Then your cost of materials, your cost of capital equipment, if you have any capital equipment. You might have a warehouse to store your shoes. All of those things are costs that go into your business. And you've got to recover them when you decide on what price you're going to sell your product for. But there's another cost in there also that's hidden even to you, because it comes to you from other businesses that you've been buying material from as well as yourself. Once again, looking at it from in your shoes, you have the cost of taxes that are imposed on you. Taxes that are imposed to you from local associations, governments, municipalities, as well as the federal government. You've got the income tax, you've got the Social Security tax, you've got the Medicare tax, and you've got the costs of complying with the tax system in general, just so that you can get your numbers together, turn the paperwork over to an accountant or a tax attorney, whoever does your return. Maybe you do your own returns. There's still costs involved there, even if you do your own return. You're going to buy some software, and you're going to put hours of time into putting it together so you can send it in and report your situation to the federal government. So you include those taxes as part of your cost of doing business. Then you add the cost, your profit margin. So you see, your profit margin, or the price that you're going to be selling your product at, includes the taxes that were embedded in the materials that came to you, and it includes the taxes that are embedded by you because they're imposed on you. And that gets replicated right through the entire supply chain, from the very, very first item that comes out of the earth up to the retailer that sells it to the end consumer. Under the Fairtax, that embedded tax, those embedded costs go away through the entire supply chain. That's why Mark mentioned there are no business-to-business taxes under the Fairtax. The first place that a tax gets added is at the retail seller when he sells that new item at retail to the end consumer. I hope that helps, Howard. If not, send them a question again, and we'll see if we can paint that picture in a different color. Thanks. Mark?
Yeah, thank you, Larry. All right, great. So let's look at the impact the Fairtax will have on seniors and retired people. And, this is really important because there's a large population here, and they're concerned. They're concerned about things like double taxation, right? And we want to alleviate those concerns. So let's get on with it. So first of all, the Fairtax delivers a tax holiday on IRAs and other tax-deferred plans. So in other words, pre-tax dollars went in, and the Fairtax gets passed, and instead of those dollars coming out being taxed, they receive a tax holiday. They don't get taxed. So that's an important point to look at, and there's a lot of retired people who have really taken advantage of a lot of those investment instruments. The Fairtax allows seniors to sell their homes and pay no capital gains. That's true. That's true for everyone. It's true for seniors. The Fairtax ends gift and estate taxes and complex tax planning costs associated with tax preparation. So again, true for everyone, but you're looking at boomers here. Baby boomers are the ones still with most of the money, and they're people in their 60s, 70s plus, and they're the ones who are spending a lot of money on estate and complex tax planning and getting gift taxes levied as well. So that's a big one. So it ensures Social Security soundness by funding it with a progressive, broad-based national retail sales tax. So I already spoke to that. The Fairtax is going to save that whole program. The Prebate lets seniors purchase what they deem as living essentials tax-free up to the poverty level. That's true. It lowers the average remaining lifetime tax rates. It generates an economic boom, easing future budget pressure on Social Security and Medicare. And it ensures your grandchildren have the same opportunity you did. And the Fairtax repeals the taxation of Social Security benefits and preserves purchasing power of Social Security benefits. So, you look at that, and a lot of those, while they're also accurate and relevant for a lot of people besides seniors and retired people, it's seniors and retired people that are often looking really closely at things like their investment instruments and yeah, just looking really closely at their budgets. And you know, the Fairtax creates an incredible opportunity for people of all age groups, but especially seniors and retired people. So we hope that gives you a nice overview of why the Fairtax is a benefit to everyone, but especially seniors. And you've certainly heard throughout the program that it's especially beneficial to lower income class Americans who receive the prebate, can purchase used goods, generate 100% of their gross pay as take-home pay. Yeah. And by the way, with this boom, economic boom that's going to happen, people are going to have much greater access to capital. So yeah, just so many great ideas here. All right, so there's some things that we want to say to you that can allow you to be in action. So first of all, you can go to this website up top, click on Reflections for the President, and say you support the Fairtax and HR 25 and S18. Get your voice heard there. PocBox is a brilliant website. It lists all the legislation currently alive in Congress, and you can go there and click support for both HR 25 and S18 and leave a comment why, and politicians pay attention to that when there's a big number. So do that for the Fairtax. Communicate with your elected official. Do it every single week. Be consistent. Make a contribution. Join the 1040 Club. So look, go to fairtax.org. Go to the Donate tab here. Click the Join the 1040 Club. Put in your credit card. $10.40 a month, guys. If this aligns for you, don't even think about it. Just go do it. Man, if we had just another 1,000 people a month doing this, holy cow, an extra $10,400, what a difference that would make to be able to hire lobbying support and put a lot more pressure on Washington. So that's it for right now. So yeah, anything else that you want to say, Larry, that I may have missed?
Well, yeah, there's an experience I had over the last couple of weeks that can very easily affect everybody that's on this particular list, especially if you are already collecting Social Security. And that's relating to inheritance. If you are the beneficiary, well, I'll speak for myself. I was the beneficiary for my son. We lost him last year, as many of you may know. And I had filed my tax return already this year, and after that being filed, I had a small refund coming because I didn't have any real income that was taxed. When I got the estate report, I found out that if I let the estate be taxed of its own merit, they would charge the amount being discussed here was only a little over $68,000. Let me tell you that also. $68,000. This was because it was money that he had saved pre-tax via a 401k. Okay? So that money wasn't taxed. It's going to get taxed again. And I'm going to tell you the two things that come out of this. If I let the estate carry the burden of the tax, they would have taken out almost $25,000 out of that 68. That's like 28% on the first 12,400 and 39.6% on the remainder, everything over 12,400. If I had a tax under my account, it came out to about $12,000, a little over $12,000. But here's what happened along the way. Part of the reason was that inherited income was added to my other income, which included the Social Security. So all of a sudden, $28,000 of Social Security was taxed now that was not taxed before. That was a surprise to me. So even though I saved about $13,000 by taxing it under my own account, it cost me not only by having to tax my Social Security, but every deferred, uh, everything that had been deferred in my income tax record in the way of deductions was used up in order to reduce the cost on me of the estate being received. So that was a pretty complex little issue. It was quite a surprise, but that can happen to each and every one of you. If you happen to be the beneficiary of someone who got taxed, or who was, the proceeds were from a 401k or some other pre-taxed investment savings plan, that tax is going to get collected one way or the other, and it will hit you one way or the other. That's about it, Mark. That was an unusual situation. I thought it might be interesting to just pass that little bit of complexity along to everybody. Mark?
Oop, had you on mute. Thank you, Larry, as always. So, last question I see up here, Larry. Do you want to tackle? I don't have an opinion on it. I don't have any evidence of it either way. From Josh is, do you think Treasury Secretary Steve Mnuchin opposes the fair tax?
We have no idea about that. I know I have, and I'm sure a lot of other people have tried to communicate with him, have not had a response. I don't know if he's totally ignorant about the fair tax or if he's aware of it, but just knows from his life that the income tax has some great benefits for those who can take advantage of them. And certainly he is among the people who can. Beyond that, I can't answer the question any clearer. Mark?
Yeah. Well, we've done it again, Larry. We've outlasted the questions. We thank you all for joining us this evening, and I want to make a request of you. Yeah, first of all, let me acknowledge you. We really appreciate you being here tonight. Those of you who've come back for the, maybe the, I don't know, 36th time, maybe more than that. Dave Leake, yeah, thank you. Yeah, we really appreciate you continuing to support this effort. And we have a request that if what you've heard tonight aligns for you, that you are in action beyond leaving here going, yeah, that makes sense. I support that. That's great. So we want you to be in action. We want you to communicate via the websites that we have down here. We want you to join the 1040. Like, just go do it. Like, you can handle it, really. And we want you to get involved. Talk to your friends, neighbors, churchgoers, club members, coworkers, colleagues, and then invite people to this webinar the fourth Thursday of every month. So we are offering a call to action, and it's necessary. So we want you to know we appreciate you very, very much, and we respect you, and we thank you for being here and taking time to do your civic duty and get educated. And if this aligns for you, go be in action. That's all for me, Larry. Anything else from you?
Good deal. No, thanks. But my Mark's comments about our respect for you folks, it's hard to express in words, but I do respect each and every one of you for everything you do, whether it be in great amounts and ungodly amounts of hours or just a little bit each week. Whatever you do is appreciated. And I hope you can step that up just a little bit, regardless of where you're working from right now. Thanks. Thank you very, very much, Mark.
Thank you, Larry. Have a great night, everybody.